Welcome back folks to another episode of T2 SMC Trader. So in this video, I'm gonna explain the fair value gap one more time so that you can be overconfident to know how to use the fair value gap. So let's go to the video, but before going over there, make sure that you have given me the thumbs up and you have subscribed to my channel if you are new. Okay. So over here, this is the London session in Monday. Look at this price action. This is a pure consolidation. If you know how to trade the London session, the only information you need to know is that London session is actually the liquidity making session or liquidity taking session. 95% of the time, London session makes the liquidity. Rest of the time, it actually take the liquidity. Okay. Look at this price action over here. This is that all-time high. At the same time, my buy side liquidity around that area. Market went lower one time, two time, three time. Now it is going higher. When market came here, I would love to mark this fair value gap from 15-minute chart. This is the Nasdaq 15-minute chart, and please carefully watch this video because it's gonna help you a lot. Okay. Look at this fair value gap. How market is working to the lower portion of the fair value gap or the upper portion of the fair value gap. Obviously to the upper portion of the fair value gap. First, market has been rejected from the consolidated crossband. Then it has came to the upper portion of this 15-minute fair value gap. Retest that area. Why it came back over there, I will explain that on as well. Don't worry. Then market is going higher. Now, as I know that market is going to make the liquidity around the London session, I put my stop loss over there from 1 minute last fair value gap when I will be in, sorry, not stop loss, target profit. When I'll be in 1 minute chart, I will show you this is the 1 minute last fair value gap. Above that 1 minute last fair value gap, I have that swing high. So this swing high is really so important swing high for me to make the liquidity. That means I really would love to see that market will come very near to that swing high and it will make the liquidity around that area from the London session. That is my expectation. At the same time, if you take a closer look over here, you can see there is a very small fair value gap from 15-minute chart. I just didn't mark it. If you want to mark it, nothing wrong with that. Please mark it to your chart, and you will see that it didn't work with the upper portion of that fair value gap as well. It worked with the lower portion, then it fell. Now let me show you something else. Over here, this is the low. I mean the lowest candle came here. The wick came here. Then market tapped to this high one more time. This wick has taken that liquidity. Trade this fair value gap one more time. I would love to mark the 50% of that wick. So in this video, you are also going to learn how to use the wick. Okay. So here, this is the 50%, okay, of that wick. Why this wick? Because this wick has taken all of this liquidity. Let me mark all of this liquidity around that area. All of this liquidity has taken, traded this fair value gap one more time. This wick 50%. Price tapped to this 50%. Tick by tick. Then market went higher. It went higher. When it went higher, this is another fair value gap. If you don't want to mark the fair value gap, nothing wrong with that. But I really would love to suggest you that you should mark that fair value gap. But instead of that, here is the order block as well. So this candle, this is the lowest down close body close candle, which is my order block. So let me mark the CE first so that I can remove, that fib over there after marking this CE. Okay. So you saw market has tapped to this CE perfectly. After tapping to that CE, market went higher. Perfectly, it went higher. When it went higher, it has made this fair value gap, bullish fair value gap. At the same time, the lowest down close body close candle, which is my bullish order block. Here, this is the main threshold of that bullish order block. This is the high of that bullish order block. Now, it didn't reach until that mid threshold. It's nothing wrong, but it could reach until that mid threshold. Okay, as it didn't reach over there, I'm going to remove that one. Instead of that, I would love to mark the high as my bullish order block. So here, this is my bullish order block. It tapped to this bullish order block as well as to this 15-minute bullish fair value gap. When market tapped to this bullish fair value gap, where exactly did it work? To the lower portion, do you see any body below that 50% of that bullish fair value gap? Lower portion? No, there is no body. So market actually worked with the upper portion of this bullish fair value gap. Then it went higher. Now here, this candle, this candle is my propulsion block. Now if I just mark that propulsion block over there as the same way I marked the order block, so I'm going to rename it as a order block, and I would love to mark the 50% of that propulsion block. Okay, so over there, this is the 50% of that propulsion block. So let me mark it. Why it is important, I will tell you when I'll be in 1 minute. But first, try to understand why I took that entry. I will explain everything. So it tapped to this mean threshold. You can see market tapped to this mean threshold of that propulsion block. Now it is going higher. I believe that it will reach very near to that line. It will go very near to that line within 30 minutes. That's my expectation so far until now. Do you understand why I took that buy? The reason is, first, I have seen that this old bullish parallel gap hold the price. Lastly, it has tapped to the 50% of that week, which has taken the liquidity, trade that parallel gap one more time, tapped to this concurrent crossman perfectly, went higher. When it went higher, this is the market structure shift, new bullish parallel gap. If you work with the old parallel gap, then this is your order block. Any of these things you can use. Market tapped over there, it is going higher. When it went higher, this is the propulsion block. Either way, if you don't want to use that propulsion block, let me mark the high actually. Okay, my job is done over there. If you don't want to mark that one as a propulsion block, nothing to worry about that. If you just look over here, this lows has taken the liquidity, all of this liquidity has taken your market structure sheet over here. This is the parallel gap. This is the lowest down close body close candle. This is going to be your order block. So either way, this is your order block or the propulsion block. Tap to the 50 order block mean threshold, then went higher. Okay, perfectly it went higher, and right now it is going through the 1 minute last parallel gap. I will see if it can make relatively equal highs over there, so that it can, so far if it is stopped over there, I have already the liquidity. So I know that London session actually is going to make the liquidity. It has done its job. Now I'm going to 1 minute chart now. So this is my 1 minute chart, and look at this price action. How beautiful the price action it is, right? So beautiful. Nobody can argue with me that this is so beautiful. Bullshit. This is very choppy price action. You should not trade around that choppy price action. But still, if you are overzealous, you can actually frame some setup. First, this is that bullish parabolic from 15 minute chart. You can see market came here around 251. This area, I don't see anything around that area. Then finally, this is the fall. This fall has taken all of this liquidity. All of this liquidity has taken. Now I'm going to remove this 50-minute bullish parallel gap. Okay, I just don't need that one, as well as that 50-minute bullish order block. I will keep this one because I took my entry from there, so it is important for me. But here, those are not important for me. What else do I see? Market has taken all of these lows and traded that 1 minute last parallel gap. Look over here. Where did it work with that 1 minute last parallel gap? Did it work with the lower portion of that 1 minute last parallel gap or the upper portion? Obviously the upper portion, and you can see perfectly it tapped to the consonant crossman, then it went higher. First it has been rejected to the top of that 1 minute last parallel gap, came back again to trade the consonant crossman of that 1 minute last parallel gap, then expanded higher. When it went higher, I saw this market structure shift over here. This was the market structure shift around that area. This swing high is valid for shifting market structure. If you mark that as your market structure shift, then this is going to be your parallel gap. Let me mark the parallel gap over here. So this is your entry parallel gap, which I'm going to expand to my right. So this is the entry parallel gap. Where is your breakout gap? This is your breakaway gap. So let me mark the breakaway gap around that area. This is your breakaway gap. If you would love to take your entry from that entry parallel gap, your stop loss should be there. Target should be there. Why there? Let me go over there and let me show you from 1 minute chart. To that 1 minute chart, this is that 15-minute high. Below that 15-minute high, this is my last parallel gap from 1 minute chart. So I have targeted the low of that 1 minute last parallel gap. I could target that highs, okay, but it is illogical because I know around London session market is going to make the liquidity. This is going to happen. That's why I'm not going to target that one. Instead of that, I would love to close my trade below that 1 minute last parallel gap. Okay. When this thing happened, there was market structure shift, entry parallel gap, breakaway gap. price came until this breakaway gap. Where did it work? To that breakaway gap, to the upper portion. Nobody closed below the 50% of that 1 minute breakaway gap or the last fair value gap. It worked with the upper portion. Now, if you want to take your entry over here to that entry fair value gap, in that specific moment, your stop loss should cover the breakaway gap. Your target should be over there. You can see it's 1:1.3, and in this type of situation, I really don't like to take entry from the entry fair value gap, especially if I see this type of very much consolidation around that area. I'm really not interested to push my button over there. Even if I would love to push my button, I will wait for the breakaway gap. So I will wait to see if market can reach to this breakaway gap. Then I will cover the breakaway gap and I will actually target over here to this 1 minute last fair value, because in that type of situation, I will get a better risk to reward ratio, or the profit is gonna be reasonable. But otherwise, it's not reasonable. I'm not interested to take my entry on that entry fair value gap. What else do you see? Market trade that breakaway gap. Finally, market trade that entry fair value gap. Boom. Here, I took my entry from this fair value gap. Why I took my entry from that fair value gap? This was your bullish fair value gap from 15-minute chart. Remember, then this is your propulsion block or the order block. So here, the high of that order block from 15-minute chart. This is the mid threshold of that order block. I saw that market after making this order block valid, when market made that order block valid from 15-minute chart, it tapped to this bullish order block high. At the same time, I had this fair value gap from 1-minute chart. So I was going to use that fair value gap for my entry. My stop loss was going to be below that low. So below that low was my stop loss. I targeted the low of that 1 minute last fair value gap. I got stopped out over here by that run. This run, I just covered the min threshold tick by tick. Okay, to be honest, I covered my min threshold tick by tick. Here you were seeing that market has traded that min threshold, but around that time it wasn't the min threshold. So when market went higher from 15-minute chart, then it has validated that order block. Until then, it was not valid. So after making that order block valid, market was overzealous. It reached until the min threshold and took that low, exactly to that low. Don't worry, I will show you the execution and you will get that confirmation. It has taken that low, went higher. When I got stopped out over here, I took re-entry when it tapped. It went above this fair value gap one more time. Then market went higher, come back again little lower. Where did it came? This is your new order block from 1 minute chart. Market structure sheet, fair value gap, tap to this fair value gap, lowest down close, body close candle. So this is your order block. So let me mark it. Tap to this order block, boom. So this was the logic for today's London session entry. Now let me show you the execution. Okay. So you can see that when market tapped to this bullish fair value gap, that 1 minute fair value gap one more time, I took my entry over there. I got stopped out because my stop loss was just below that line. So look at the price over here, everything is over there. I got stopped out over here. Then I took re-entry when it was inside that fair value gap one more time. I saw that it has traded this min threshold of that order block, and it came back again into this fair value gap. I took re-entry and my target was that low of that fair value gap. Okay, so that's for your confirmation. Sometimes shit happens. Yeah, I got stopped out because I just covered the min threshold. If I would just cover a little more over there, then I won't be stopped out and that would be a perfect entry for me. But as I got stopped out over here, I took re-entry because I believed that market was just giving me the things I'm looking for. And finally, you can see that market has made that relative equal highs that was expected because of London session. And I would love to see that until the London session is not in, this high is not going to be taken, because this is going to be my buy side liquidity. So here, that was my entry and the risk to reward ratio. I got stopped out, I took re-entry. Okay, so my re-entry was from there, and if the risk reward ratio was 1:4 and it was a perfect one, that means I took 3 handle loss for 10 handle profit. Okay, so guys, that's all for today's London session video, and I believe that you will understand how to use the weak 50% to confirm your bias. Then 1 minute fair value gap, upper portion, lower portion, 15-minute fair value gap, upper portion, lower portion, everything. I guess that you will get little insightful this by this video. Okay, so make sure that you are giving the thumbs up, and until the next video, cheers.